Good afternoon, friends. This is 21st February 2021, and this is one of the many lecture series that we will be doing on stock investment and trading. And this is regarding the Indian equity market. As you would know, there is a bull run that is currently going on, and the idea is to take profits, make profits on that. And for that, we usually use Zerodha trading account. You can have something else as well, but as a group, we use Zerodha because we follow a common methodology wherein we try and ride the trend. And for that, there is a way of setting up stop losses and keeping them moving up. So for that, we use Zerodha because there are certain advantages in that. You can have something else, but you will have to sync your, uh, orders accordingly. And secondly, the most important thing that we use is a TradingView website or an app wherein we look at the charts of our specific stock or indices, whichever we are trading upon. And basically, we use these in conjunction to create our stop loss orders. Uh, why am I beginning with the stop loss order? Is because this is the foundation of profit booking. So in any trade, there are many ways of trading. There are many ways. What we are looking at basically is swing trading and positional trading. So there is scalping, and then there are so many ways. I don't even know all the names right now. I don't even remember that, but there are too many ways. I've tried many of them. This is sort of a relatively longer term strategy compared to intraday trading. So longer than that, and it's bound to give you more stable profits with a higher percentage of hitting the strike. I mean, the strike rate is pretty high as compared to intraday trades. So let me take you to the screen and uh, share the instructions with you as to what you're expected to do. So if you can see the screen, this is a TradingView website. If as you can see, and I'm not signed in here because I'm signed in with my Google account in another browser. This is for you guys to see. Tradingview.com in.tradingview.com is what we use. There are other websites like investing.com, etc. Zerodha has its own charts, but investing.com and tradingview.com are one of the best ones. And you know, all the professional traders use tradingview.com. This has charts from markets all around the world, everything, whether it's India, whether it's Europe, particularly, I mean, Germany, France, Britain, Brazil, United States of America, every index, every stock in that index, every commodity is there in this trading view setup. So that's why people use this, including currency. Everything is there. So as you can see, this is the home page, the front page. You need to sign in. Maybe you can sign in with your Google email or anything else. It's your choice. Once you create an account, I want you to go to charts. If you can see my mouse, uh, if you can see this, let me just hold on here. 1 second. Where are we? Yes, sorry about the interruption. Okay, so if you can see this, yeah, so you go to charts. Let's see how it loads. So it's taking a bit of time to load. Yeah, so what we have is a nifty 1 day chart in front of us. We will have to learn to set this up, and once we do that, we will save the settings. I'll show you how to do that, and then we will use the same chart setup which we will create right now for every item that we are going to look at, whether it's a stock or an index or a currency or a commodity, whatever it is. So that's what we will use. So a couple of things that you can look around. I'll just move my bar here. This is a nifty chart, a lot of things on the screen. Let me simplify what things are. This is a watch list. As you can see, it says you can, if you click on this down arrow on the watch list, you can create a new list. There is a default list created: Nifty, Bank Nifty, Sensex, CNX, IT. Let us see what else it has. SPX should be Standard and Poor Index. Then it has a few stocks, and then a few futures. This is a very standard setup. You can keep it as well, but you can always create your own list by clicking it create new list. We won't go into that. Even in this list, you can add a symbol. If you can see, I just clicked on this plus mark. Then you can type anything here. Let me type Tata Motors, let's say. So I can see Tata Motors, and it's highlighted here under the segment all. Then there are stocks, futures. If it's on all, it will have Tata Motors stock as well. And if you can see the third item, Tata Motors futures as well. So this is fine. Let it be on all. You need not select any specific one of these. And then stock exchange is also shown, BSE is also there, NSE is also there. We will take NSE always because it has more volume. So anyway, I'm not going to use that right now. I'll stick to Nifty for now. And this, okay, what is this? Okay, so this is a yeah, these are normal candles that are there, and each candle is 1 day candle. So let's say if my mouse is on the 1st February 2021 candle, the opening, actually the opening was somewhere about 13,657. The closing on that day was 14,314. So this is 1 day candle. Then each of these candles represent the price movement within a day. To simplify things, for a green candle, the base of the candle is the opening and the top of the candle is the closing. For a red candle, the top of the candle is the opening and the base of the candle is the closing. That's how you read a candle. Okay, so these are the basics. If you look at my mouse on the left hand side where Nifty is written, right next to that is 1 day written. If I click on this, you can see it's 1 second, 5, 15 and 30 seconds. These charts can only be used by premium members, but you don't need that. This is only useful for intraday. Actually not even useful for that. You can't trade on such short term basis, but nevertheless there are 1 minute, 3 minute, 5 minute and so on. So let us stick to 45-minute charts. I'm clicking on 45 minutes. Okay, so this gives us a slightly different picture, of course, as compared to a 1 day chart. So now every candle is a 45-minute candle. And what I'll do here is if I click on candles, there are some options. There are bars, there are candles. The 1, 2, 3 and fourth option is Heiken Ishi. If I click on this, you see that it's a slightly different sort of a color pattern that emerges here. So these are more refined candles because this is I can these are all Japanese terms created by Japanese traders long ago. So it's a more of a smoothened thing. And it's really useful for seeing a general pattern. If you can, as you can see, there is a good uptrend, then there was a downtrend here as well, then it went up, and then there was a downtrend, and currently there is a doji. Doji is a Japanese term as well for a strange kind of this sort of a candle which has no direction. So these are reversal points. Anyway, let's not get into that right now. What I want you to do is if you can see FX here, you need to click on FX. Then here you need to click type EMA. So this is called moving average exponential or exponential moving average. Let us see if this is the one we need to use. Yes, we can use that. Please follow the instructions carefully because once you are done with the setup, this is what you will always use. So EMA is a line. So this is a 9 close EMA. What does this mean? So it's a line basically formed by moving averages. First of all, it's moving averages. What does that mean? So if I take 9 candles from here, the first one, I mean basically the last one where that was a closing candle, and 1, 2, 3, 4, 5, 6, 7, 8, 9. So the average of these 9 candles is a moving average. So let's say then tomorrow another 45 minutes pass, there is another candle added. So the candle at the back, the ninth candle at the back will not be considered. So 9 candles up front are always considered. That is a 9 EMA, 9 MA basically. That's what it's called. EMA means there is more weightage given to the forward candles as compared to the back, the ones at the back. So there is a different weight given to these candles. That's EMA. That's the only difference. What we need to do is, you see these 3 dots. Once you put your mouse on EMA 9, these 3 dots, click on that, copy, and do a control V, and do another control V. You don't see any difference on the chart, but you see there are three EMA 9 now. What I'm going to do is, now I go on the second one. There is a settings icon here right next to the eye. Click on that. Then I get a dialog box like this, and I will change the length of the candle. So I will make this uh, let's keep it 50. Okay, and now we have a second line. Similarly, we go on the third dialog box, EMA 9, go on the setting. Here I keep the length. Basically, this is the number of candles that we are taking. Instead of 9, now we take 50, and then I will take 100. So now we have three lines. I will also change the colors so that there is no confusion. So I go to the first one. I also want to change this time frame. I would like to keep it at least 20. So we have, now we have a different time frame. Okay. And now I would like to change their colors. So again, I click on settings for the first one. I go to style. You see this bar here, this blue bar. Click on that. So you can choose any color, but there is a way I keep this, which I find easy to follow. Since this is the shortest time period, so I will keep it. You know, I can keep it. Uh, I think I have a different color, but you can keep it blue. Let's not keep it green. Green means there is an uptrend, but we don't want to say that. And if you see below, I have increased the thickness of the line. And then there is opacity. I don't want you to this opacity to be at 100%. Let's keep it somewhere about 47-50% or below that, because this sometimes overrides the price. So it's above a candle and then you don't see the candle properly, so you don't want that. I'll have it thicker and reduce the opacity to 36. That's blue color default. Okay, so you see it's different. It's a bit opaque and it's thicker, easy to see. We don't want to miss these candles. Then I click on settings for the 50 EMA. I click on this blue color box. This is in style. Right next to input, there is style. For this, I choose a danger color, something like red or things like that. Again, 55, 49. Okay, so less opacity, 39% is what I've selected, and third thickness is the third line. That's what I have done. You then do as what you like. I don't like this color. I want more. Okay, this is better. I wanted to highlight the danger. In fact, I choose the green color itself for this one. Better. No, no, no. This is fine. Okay, fine. This is okay. So you see now I have a green line, sort of a pinkish red, whatever you call that line. And for 101, I usually choose a black color. Black, thickness 3, opacity, let's say 50%. And we are done. I hope you followed the steps. Under style, I click this dialog box, I choose the color, I choose opacity, and I choose the thickness. And we are done. So now we have three lines. I will click, just look at my mouse. I went on the right side corner, watch list and details. You see this couple of lines. I click on this and this thing collapses at the side. So now I have a very clear view of the chart. 45-minute candles. These are price candles, Heiken Ashi. You can select the candles from here, left side, right next to time frame, and then you can always change the time frame, which we have selected 45 minutes. This is Nifty. If you click here, let me show once again. Where did I click? On the left side, if you click on the symbol search, where the name is there, you can always change the name. So if you want to put Tata Motors, you type it here. Let's say we put Tata Motors, and we get Tata Motors, and we can select this one. So in the EMAs will remain, the setup will remain the same, and now instead of Nifty chart you will have Tata Motors. We'll show that, but first we want to make a few more changes. Now let's come to FX. We have done this EMA setup. We need a few more things. Let's go for MACD. Just type MACD here. This is moving average, convergence, divergence. Click on the built and under built-ins. There is MACD. We went to FX. Please note this FX. We type in indicators and strategies. We type MACD under built-ins. section, we get this one. So I click on this, and okay, okay. So it does not allowing us to add MACD. What I'll have to do is I'll have to, because this is a free account, so it doesn't allow us the liberty to use more than four indicators. It seems more than three indicators. So I will remove the 20 candle line. I click on this, there is a cross, and it's gone. There was a very good use for that candle, but it's okay, it doesn't matter. What I will do is I will reduce this time frame from 50 to 37. So I am somewhere in between, and I will, instead of 100, make this to be okay 60, or let's say 66. uh, these lines, EMA lines, are used for crossovers. If you can see this price movement from 29 January onwards, there was an uptrend followed by the price cuts the, this pinkish line first, then it cuts the black line, and then the pink line cuts the black line. So whenever your price cuts in any time frame, these EMA lines from the bottom, that's a signal of an uptrend. This is first signal, this is second signal, and this is the confirmation. Although it's a bit late, but that's why we need smaller time frame EMAs as well. So you can always change these time frames for EMA, but generally speaking, you don't, and you don't even need to change the EMA time frame. Just change your chart time frame from 45 to, let's say, 15 minutes, and you'll get a better signal. So uh, that's why, I don't want you to fiddle with the EMAs. I just want, you can always fiddle with the time frame. So in a 15-minute chart, you get the signal quite early on, pretty much here itself, when it was at 14,200. That's a signal to buy, and if you followed that, you would have made a decent profit. Anyway, so now we need MACD. So we click on FX, we type MACD, and we click on this one, and I think we have our indicator set up here. So you look at the bottom. I'll go back to the 45-minute time frame. Now we have an MACD set up as well. I will give you a very brief idea about what this does. There is a whole lot of mathematics behind this, but as a trader, you don't need to look at that. Few things you need to keep in mind. MACD is used for trend. So basically, when there is a trend, either uptrend or downtrend, that is when MACD is useful. For range bound markets, there is RSI, but we are not able to use it right now because it doesn't allow us. And right now, we are not even actually bothered about range bound markets. And the reason we are not talking about range bound market is because it's, difficult to earn money in range bound market. I have always lost money in range bound conditions, whether it's in any time frame, whether it's short time frame or a big time frame. Whenever it trends, it's better to make money that way. That's my understanding. There are ways to make in range bound as well, but I don't like that. So if you see MACD, it's a very simple concept. Uh, Let us focus on 29th January. If you can see my mouse, there is a timestamp at the bottom. So what happened on 29th January? There was a continuous decline in the price. Okay, wait a minute, there is some problem. Why is this dialog box here? Shit. Okay, guys, 1 second. So there was a problem with the free account. Now I'm going back to my premium account, and I will share that screen with you guys. Okay, so we are back to our chart. This is my premium account. It's called long-term chart. Anyway, this is a 45-minute candle. This is Nifty futures contract. And if you see what happened on 29th January, there was a continuous price decline. So how do you know there is a change in the trend? One way is your EMA lines and your crossovers can tell you, but MACD can tell you this thing in advance. Okay, why is it stuck? If you look here uh, at the bottom, if you just pay attention, the blue line starts to cross over the orange line, if you call that orange. This is at this time frame. Yeah, if you see at the bottom of the chart, This MACD is the bottom. This is MACD. This graph is MACD. So the blue line starts to cross over the orange line. That's an indication. You don't enter the trade at this time, but that's an indication. And somebody is calling. And then you see the histogram. It starts to turn green. When the blue line hits this histogram line, this is the zero line, that's your confirmation to buy or to sell. If it's a downward trend, then it will be in the other direction. But here, this is the confirmation to buy. And if you can see, I have a super trend indicator set up here. So that's also giving me a signal to buy. And this is slightly ahead of the EMA setup. So, as a trader, I need something which gives me a signal beforehand. So this is the basic setup that you need to create. Then we can talk further. Please do that. And once you are done with the setup, you go to the manage charts layout on this section. Then there is an option of save. You click on save. You have to name it if it because this is my premium account, it's already named. So try renaming the chart or just try saving the chart if you gives you an option to uh, name. And then there, if you see this cloud, if you click this will help you save the chart in future all the time. So just click on this and the chart is saved. Now I'll have to stop this session here. I'll share the video with you guys. Please create this setup and then we can talk further. Thank you.